let's focus on the new relisting of the day, Essar Ports, and it's a significant premium that the stock actually kick-started the day with. However, it softened from the peak. Rajiv Agarwal, the man of the moment, joins in. Rajiv, congratulations. It's a good listing at that. First, if you could share with us, how significant is this listing of Essar Ports in your entire scheme of things, where you focus dominantly on the port segment?
Well, I think it means that there is another stock which is coming into the port sector, and as far as the company is concerned, this whole exercise was to segregate assets, a bunch of assets which were kind of different kind of assets, like ports, which is basically infrastructure and shipping and logistics and oil field services, which are all different asset plays. So the idea was to debundle this whole this bouquet of assets and get two different entities which will focus in their respective areas. So definitely it is a very significant thing for us, where now the sports company is going to focus completely on the port sector, where we are looking at very handsome growth, looking at say about 88 million tons of port capacity at the moment, going to about 158 million tons. So I think it's a significant thing, and it's a significant listing for Essar Ports Limited.
Rajiv, could you quantify for us the total capacity utilization of your ports?
Yes. See, last year we ended the year with 76 million tons of capacity with 40 million tons of utilization. So it was around 55-56%. And this year we are now at 88 million tons. We've added 12 million tons of liquid port capacity at Wadinar, and we're expected to go to about 104 million tons of capacity by the end of the year. So and by the year 2013 March, we are going to be about 158 million tons of capacity. We are expecting 120 million tons of capacity utilization at that stage in the year 13-14. So the capacity utilization is going to grow from about 55-56% to about 75-80%, which is a very healthy capacity utilization, beyond which then it means that there is a fair amount of congestion and it's not a very efficient way of running things.
Rajiv, your port business margins have traditionally been about 50% or a little over that. Can we see that margin level rise to levels of close to 70%, which is the level that your peer Mundra port clocked in FY11?
Well, we clocked about 74% in FY11, and we expect that these margins are going to go to about 77-78% in the years to come. So we have always been in the region of about 74-75. We are probably the highest margin port company in this country.
Right. Rajiv, how much of your current port business or port revenue is coming from the Essar group, and how much of your current revenue is coming from the non-Essar operations?
See, the way we look at it, that these are all different companies with foreign listings and various shareholders, and what we have done in the company is that we have tied up anchor customers like in the sector of steel, oil and power, which are the three main drivers of port utilization in the country. If you see, the container business is around 12-13%, and the rest of the business, which is almost 85-87%, is coming out of the bulk, dry bulk and liquids, and we are in that area. And we have, we do have a lot of visibility of this cargo from the group, Essar group companies, which will probably contribute almost 90 million tons of this 158 million tons of capacity that we have. Going forwards, we are going to be about 70%, Essar group, and 30% third-party cargoes. That's how we look at it, because the projects are in this implementation stage. So today the percentage is higher, where we have almost 95% coming out of the group.
All right, Mr. Agarwal, good luck, and thank you for joining us on ET. Now let's take a break with the news that it's 5,500 plus for the Nifty, and Sensex also on a relative basis today is outperforming regional markets.